Hey, it's Jordan, and this video is being recorded on the evening of Wednesday, February 10th, 2021. Thank you for joining me today, and please subscribe to my channel so we can get this and future videos out to a wider audience. Thank you. Now, in this video, I'm going to discuss gold and what current volatility indicators are telling us and how that portends to the future technical outlook. Okay, so in this chart, we have a weekly bar chart of gold, and then we have a series of volatility indicators starting with GVZ, and that's essentially the VIX for gold. And below that, we have ATR, which is average true range. And then we have a series of Bollinger Band widths. We have the first is based on 40 weeks, then 60 weeks, and then 80 weeks. And so we're looking at different time periods with those settings. Now, gold made a huge move, obviously, and it's been correcting and consolidating a little bit for a full 6 months. Now we're into the 7th month of that. And as you can see in the past, gold typically makes a big move and then it corrects and consolidates for a while, getting itself in position for another big move. And so the horizontal lines there, which you can see there's one just at the very end of 2002 and then middle of 2005, middle of 2007, past the middle of 2009. Then we have 2012 at the end of the third quarter. Then we have at the very beginning of 2013, and then in 2018 and 2019, those are points when the volatility indicators were, those were points, I should say, right before gold made big moves. And so we can see how the volatility indicators look. And so essentially, periods of falling or declining volatility tend to lead to major moves. And obviously, there's no specific level that they have to reach that tells us that there's a big move is imminent, but it's nice to keep an eye on them. And what they're telling us now is volatility has been declining in gold, and it's my view that that will continue for a while. And it's important to note that doesn't necessarily mean that the market has to go sideways for a really long time. It's possible. I mean, the market can trade in a range with an upward or a downward bias, and volatility can still slowly or steadily decline. So one example, and I'm not predicting this, but this is, this could be a potential thing in gold's future. It makes a low, it rebounds, it recovers a good amount of that low, rallies back to 1960 or maybe a little bit higher, resistance there. Then it corrects more. After that, it comes back down. Maybe not all the way to the recent low. Then maybe after that, it rebounds again, tries to get up to the new high. So I guess what I'm getting at here is it's possible that last week gold made a low, and then it can freaking spend most of the rest of this year consolidating, but with a upward bias potentially. And long-term volatility in these indicators can still be declining in that type of situation. So that's something to keep in mind. And given my outlook, I don't think gold is going to break to a new high this year. If it does, it'll be at the very end of the year. Maybe it's early next year. That's just my view. I mean, I could be wrong. But in that kind of scenario, we should see volatility continue to come down. So I sketched in there, you can see at the top, I mean, that is a potential path forward. And gold isn't, I mean, it's rising slowly, you could say. It's not exploding at that point. But if we get that type of price action, the volatility indicators will definitely decline. And you can see what happens. Go back to my horizontal lines. And for the most part, when they have been declining for a while or they get to low levels, that sets up the potential for a really big sustainable move. And I believe that's what gold is potentially working towards over the next 12 to 24 months or so. So that's basically it for this video. I know I'm rambling on here talking about volatility a lot, but the big takeaway is, number one, volatility is declining, which is a good thing, because if that continues to happen for most of the rest of this year, it's going to set up, it's going to put the market in position for that big sustainable breakout move sooner rather than later. I mean, as far as the long term. And the second thing is, it's possible that gold already put in a low, or maybe it puts in another low at some point this year, and it can rebound and make higher lows from that point and not break out yet. And even in that scenario, volatility can really compress, really decline, and put the market in position, for that big breakout move that we're all hoping for. That's all for this video. You can follow all my work at TheDailyGold.com. Check the description under the video. If you're watching this on YouTube, I have a lot of free information for you there. And I hope you found this video informational and educational. And look forward to doing another one for you guys in the days and weeks ahead. Thanks.